My name is 20090209Amiel. I'm one of the principals of 20090209 Capital Partners. We have been in business for almost 5 years now. We started in March of 2004. There's two companies that came together to create a joint venture. We've created a proprietary-like trading company, and we've structured it like a hedge fund so we can take in outside capital. We started with two different strategies, one in the energy space and the other in the equity option space, with our own capital and some friends and family. We allocated $2.5 million to each strategy, and we've had a very good success over the last 5 years. Where now we're managing close to $300 million and roughly 50 plus traders in our firm. We bring on traders that are very entrepreneurial, very opportunistic, as we are, and each trader gets to manage anywhere between $5 to $20 million. In the equity option space, there are 7 distinct groups, and what we provide to each of the group is everything that they need to build a business. The only thing we don't provide them is the strategy itself. We go through a very long and rigorous due diligence process with each trader that is going to come onto our platform, because our strategy is, our business model essentially is absolute returns. All the principals of the firm, including the traders, have a good portion of their net worth tied into the strategy itself. We are not an asset gathering business. We are strictly performance based. And as we started with 2 different strategies, the energy space, we have 5 different groups, roughly 15 different traders. On the equity side, as we started with $2.5 million, now we're at about $180 million. And that is comprised of 7 different groups and roughly 30 different traders. Each group is comprised of anywhere between 2 traders to 15 traders, and each group has its own head portfolio manager, and we help that head portfolio manager build his business by bringing on other traders into that group and onto our platform. We also have put together an algorithmic strategy where we trade long-short equities, which is non-directional. It's very robust, and we grow it very slowly, very deliberately, just as we do with all of our other strategies. We also have a fixed income group, which is managing roughly $12 million. We trade exclusively exchange-listed products, and our portfolios are very diversified. In our equity option space, we have roughly 2,000 different names, and so it's very broad-based. There are 3 drivers in that strategy that comprise our P&L. One is your typical volatility, long-short volatility in options, and then we are also market makers. So we're basically providing flow to all the broker network, the show brokers that come from Goldman Sachs or Merrill Lynch, and the show broker network could be comprised of maybe 150 different brokers that are constantly emailing and IMing and calling our traders looking for bids and offers and different options on different names. We also stream quotes on an automated basis, which means that we are providing bids and offers on very specific names. There's roughly about 400 different names that we are making markets on an automated basis. So the strategies, there are 3 main strategies in equity options: the volatility, the arbitrage, and the streaming quotes. In our energy fund, the energy fund is comprised of, as I said, 5 different groups. We're trading electricity, natural gas basis. There's very, very little directional component in our energy space, which is typical in all of our strategies, that we are more or less looking for edge, mispricing of securities and options as opposed to directional. Our business model has afforded us a way where we are very liquid, and we're not, let's say, investors. We're traders. We're making markets all day long, and we're extracting edge in every single way we can based on our model. We have roughly 8 programmers, financial engineers that build our models and provide the applications for the traders on the front end to price and manage their entire portfolio of options. And if you have 2,000 different names, a lot of the intraday hedging that takes place is done on an automated basis. So technology is a very important part of our business, and we believe is part of the success of our business. We are not a trading company that is looking for instantaneous edge. So we're not competing with some of the companies like let's say Goldman or Citadel or some of the names that have a huge technology budget. Most of our strategies are somewhat longer term, meaning they could last for 3 months. But we also, as I said, we're very active managing, providing liquidity to the corporate clients that are part of the broker network, so that we are trading around our position constantly. And if you can visualize a trading room of 50 different traders, everybody is busy. Everybody's doing research. The traders are predominantly discretionary traders, but there's always a mathematical or a scientific approach to what they do. There is no buying or selling because they like the market or don't like the market. Everything is all based on edge, extracting edge in the marketplace. We're making markets to roughly 3,000 different optionable names in U.S. stocks. And on the energy side, we are making markets in all the different locations of natural gas basis, predominantly on the West Coast, which we're very active in.